Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Thursday, May 12th, 6:43 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Gonna do something a little different this morning. Gonna do a quick recap of last night's video and then move on to the SPDR sectors and a couple of other ETFs you may be interested in. If you're new to the channel, welcome. If you'd like that more detailed look or you missed last night's video, please look on the YouTube channel, probably right next to this one as on the channel, for last night's market on close presentation, about 45 minutes, pretty detailed. A lot more detail than I'm going to go into this morning. You are encouraged to watch that video. A lot of key levels there. I'm going to hit a few of them today, but for the most part, this morning will be a review of what we covered last night. Quick look at futures. Bitcoin in the crosshairs off. It's moving fast, but off 4 to 6%, down around the 27.5 level. Oil off 1.4%. Large caps and small caps are holding in there at about minus a half or 0.65%. NASDAQ's off 1%. On the macro front, of course, today being Thursday, we've got the jobs report. Also, we've got an important data point here. Producer price index final print this morning. Nat gas inventories, 30-year bond auction at 1 p.m. Over on the earnings front, there were two names that stood out. One before the bell, CyberArk Security, CYBR. And then after the bell, affirmed AFRM in that buy now, pay later consumer lending space, along with Upstart that got cut in half, literally, on earnings. Affirmed has already taken a brutal beating, but as we've talked about before, price really doesn't matter at this point. You can say, yeah, but it's down 80% from where it was. Well, that doesn't mean they can't take it down to 98%. I'm using that as a figure of speech to make a point. These companies obviously aren't worth what somebody thought they were worth. They're a lending company, and all you got to do is go to other, quote, more conventional lending companies, look at their PE, and you'll find, go to a Capital One with a PE of 6 that's been in business, 40 years with a lower tier, servicing a lower tier consumer than, say, an American Express, and see where Capital One is trading on a PE basis if you want to get a read on, quote, a real company. And you could make a case that Affirmed and Upstart are even a lower tier of credit quality than those established credit card companies. So, if you're going to take a shot on earnings, make it be a cheap shot. There's a ton of premium built into these options. Market makers are paid to win. So you got to be really careful about, trying to take some big shot at earnings. But, if you want to take something, 50% out of the money and hope for a disaster, it's more or less a lottery ticket. But a lot of premium will come out after that earnings call, so that'll hurt your puts if you want to go in that direction. So let's dive into a chart real quick. Just quickly, NASDAQ oscillator oversold down here at minus 70. New York oscillator, same thing, down here at minus 70. This market is really, really spring loaded. The reason I say that, envision these oscillators as a rubber band. And when you get down to this level, normally what I'd be saying is, be scaling out of your puts, be lightening up, because the odds of a snapback, a vicious snapback rally, are highly elevated. And that remains true, but all of these other instances, if you think about it, were within the context of a bull market. And a lot of these reachbacks were, plunges to the 50 or one day wonder kind of events. This time may be different. It's really it's a coin flip, really, because if this crypto contagion spreads, if there's some kind of systemic risk out there, or if the masses on this drumbeat of losses just all of a sudden throws in the towel, that rubber band could break, and that's when you get that waterfall event where all bets are off. So it really is pulled back almost to the max. You got to be very, very careful not getting caught, max short when this thing snaps back. Or if you've been one of these people that have been conditioned to, buy the dip because it always works. That's worked for 12 years, but be really careful trying to call a bottom here, because I don't think we're even nearly to that level. Here is that Bitcoin chart. You can see that this thing is just letting go, and this is one of the good ones, right? This is an established cryptocurrency. If you want to go down to the lower tier, junior tier coins, they're a lot worse. And this stable coin thing, God knows where it goes. I'm totally watching from the bleachers, not involved, but I do know this. It's a measure of liquidity. It's a measure of momentum. It's a measure of confidence. And when you lose all three, God knows where it goes. As we break these levels here, massive void in the chart, and really you don't have any technical support until you get down here to 12,500. And as we all know, Michael Saylor gets a margin call at 21,000. So I've almost got that penciled in, not because everybody knows he has a margin call, but because the technicals align with that. Knowing somebody has a margin call at 60,000 is a lot different than knowing somebody does, and while this thing is letting go. So be really, really careful out there on Bitcoin. Now, quickly go through the indexes. If you haven't been following along or you're new to the channel, please get out a pencil. I'm going to give you some levels to watch for today. Now, I just said we were trading lower. Your first level is yesterday's close at 392.75. Your second level is 395, and your get out of Dodge short level is 400. We've got a steep bullish falling wedge. If the bulls can recapture yesterday's close, that would mean toggling the index green, right? From green to red, that's always a bull, or excuse me, from red to green, that's always a bullish signal. If they can recapture 395, that would be another short-term check mark for the bulls. And if they were to recapture that psychological level at 400, I think the bulls would be well on their way. That would open the door to 405. So if you are short, and I am, I'm going to be watching those levels really carefully. Yesterday's close, 392.75, 395, and 400. Let's jump to the NAS. QQQ, 1 hour. Yesterday's close, 291.84. Next level, 290. Well, I already gave you that. 291.84. And then the next level above is 297.5. That would bring you up to this prior cluster of trades, and quite a bit of resistance here at 297.5. You can see there was a lot of hourly candles in that range, so I think that would be significant. It's also significant for this reason. Breaking out above that would give a check mark for the bulls of trying to break out of this falling wedge. I've got the black trend line in here, and you can see that wedge formation. And then also breaking out above the midpoint of this downtrend channel, that would open the door for a flash move up towards 305, 307.50. And then you got a big level at 310. Above that, I think you're going to 317.50 for a bigger test. IWM, yesterday's close, 170.60. I would have that on your board. And then you got a nice level here at 172 to watch on a recapture. I will be watching that level really closely, because once you get above 172, the door would be open for a move to 176, and it doesn't look like a lot on the chart, but if you're sitting there with IWM puts, depending on when your expiry is, of course, the door's open for a $4 move up to 176. And then if the bulls take out 176, it could explode really quickly. Watch the sentiment leaders today. Apple, most widely held. I saw it was down about, $2 this morning. This thing is letting go. No matter what ETF you pick, Apple's going to be your highest weighting. And if those are being liquidated, that means they're going to be hitting Apple. I would be watching Tesla really carefully today. It's the retail sentiment leader. It's down. Everybody knows Elon has a margin call. And I was just flipping through some Twitter stuff this morning and saw a comment. Has anybody noticed that Elon's gone dark this week on Twitter? Last week it was, constant flow of tweets. This week, almost dark. Does that mean he's doing a rethink? Does that mean he's like, oh my God, if they, can I really afford this? Who knows what the speculation is? But just from a technical standpoint, taking nothing else into consideration, this is open for a test of the February low at 700. Below that, it starts to fall away quickly. So watch Apple, watch Tesla really close. I think they're market leaders and sentiment leaders, both of them. Let's jump over to the SPDR sectors. We went over these, I don't know if it was last week or the week before. I wanted to give you a progress update. Materials, fake breakouts here resulted in a move to the bottom of the box. We had another fake breakout here, making its way down to the bottom of the box. We had a hesitation here at the 40-week moving average. Now we are below it. I think there's going to be a move down to this 77.5 for a decision point. If you were to get a break there, keep in mind this is a $10 wide trading range. So a decisive break below 77.5 would target 67.5 down in this area here. You can see that the volume over price profile, there are some intermediate levels here at 72.5, but you can see that it falls away pretty quickly. So I think that 77.5 is going to be a really, really important spot. XLC is really a proxy for Google and Facebook, being 44% of the index. I'd like to think that we've had this one all along, whether you traded it or not. I have no idea. We had an A, first leg down, kickback rally, measured move target, and we're there right now. You can see that price is starting to move below this support level here. Large volume over price bar here. If you recall from last night's video, a couple things about Facebook and Google. Facebook is in a $25 gap, so the conditions are set up there for that to take a huge plunge, especially if the rubber band breaks. So that would affect XLC quite a bit. Google, on the other hand, a lot of the damage has already been done. Unless there's some catastrophic waterfall sell-off in the broad market, I think most of the damage on Google has been contained at this level. And you can look on the daily chart and you'll see it clear as day that yesterday, while the market was down 3%, Google was only down like 0.5%. So I think the meat is off the bone there, save for a, like I said, a catastrophic waterfall sell-off. So I think within XLC, I think the opportunity is in Facebook rather than XLC. Of course, you're welcome to play it either way. If you wanted to set an alarm here as at a level of, if you get a sense the rubber band is breaking and you just want to grab something, broad market based thing that includes Facebook and Google, I think this is a nice way to go because there's not a ton of support below until you get down into the low 50s. So keep that in mind. Energy has been holding up really, really well, managing to hold this 73 level. I think energy is fine if you remain long. Just have an alarm at 73 because that would signal not only a break of this top, but also a break below the midpoint of the channel. And once you break the midpoint of the channel, you tend to go to the bottom of the channel. You can see it here, bottom of the channel, top, bottom, midpoint, held as resistance, bottom of the channel, top of the channel. So if this thing were to break down, I would see it coming back into the mid 65 range. Financials. We have been focused in on this $5 wide trading range below the 40-week moving average. We got the break at 36. $5 wide targets 31, which still has a ways to go. I will tell you that one trade that has been really popular in the option chain, I think I even made mention of it, I can't swear to that, but the June 32.29 put spread, $3 wide, and that would align really well with that $31 measured move target. I would probably adjust that. If you're not in it, I would key off of 33. Why? Because you got a gap or a void in the profile. See what happens with price as it gets down to 33. If this thing holds, that would be a place for it to hold. But if it breaks 33 and you get a sense that things are falling apart, I would adjust around 33 rather than going down to lower levels. This thing does not move that much, so yeah, I think 33 is the key level. XLI, we had this dead to rights. We talked about 97.5 with this $6-7 wide range. We are coming in on that 90 support level with the large volume over price bar. I would set your sights on 90 for either a potential reaction or a further sell-off. I think it's tough to do anything right here unless you're already in from the breakdown. XLK, obviously with the NASDAQ, this is a proxy for Microsoft and Apple, about 50% of the index. And we had focused in on this 141 area. That broke this week. So now my target is this 126 area. I would be looking for that on a measured move target from this A, B, C move and breakdown from this level. I'm looking for 126. I'm just going to put staples up here, holding up pretty well. I don't think it's one to really, you can short or do anything you want, but this one is holding up pretty well. I think there's probably other better places to hunt for a short than XLP. And if the market stabilizes, this probably might be a better long than it is short when things turn around. If you could get something down here in 74 that held, that might be a nice entry point. XLY, we had this one as well. A, B, C, we've got to the measured move. A lot of this is Amazon, of course, which has really let go and been influencing this one. Now here below 150, I see a little level down here at 140, but then I think the target for this is 130, which is the pre-COVID high. And if you want a benchmark level on whatever you're trading, doesn't really matter what it is, I would be looking at those pre-COVID highs. I think the majority of stocks will find that level before it's all said and done, and XLY is well on its way down to that 130 level. XLV holding up better than most, although it's down a lot. Fake breakout, bottom of the box. Fake breakout, bottom of the box, below the 50. I would have this 124 in your crosshairs. You've got a 10 or $11 wide trading range. You break below 124, that's going to target 114 down here. Yeah, so I would be looking at 124 as a key level, and if you get a sense of, hey, snapback rally, bear market rally, relief time, you got a pretty good entry point here. We're trading 126. I'm going to assume that you're going to get some further selling until you get the green light. So if you can get this thing down near 124, you could set a stop just below. If you got a, if you got the green light signal for bear market relief rally, that would be a great entry. And then you could shoot for a move back up to 135. Yesterday, I got hit by a Gatling gun of home builder sell signals. A, B, very stubborn in here. When the market was going down, home builders did not want to give it up, even though everybody's been reading about mortgage rates going to the moon and all that kind of stuff. Really stubborn in here. I tried ITB a couple times in here and got kind of frustrated, but got a signal on this breakdown of the bear flag, and you can see the measure move points down towards 51. I got a June, not a lot, just a couple, June 55 puts in the last hour of trading yesterday. So I'll keep that on a short leash. Obviously, any kickback rally to 57, or that recaptures 57, would kill the trade. And if you're not in it, and you took the approach that we're overdone, we're probably going to get a rally before we get a collapse, you could wait for the breakdown back test and try and get an entry around 57. That would give you a much tighter stop, better entry, that kind of thing. But like I said, I had marked a half a dozen of the home builders yesterday, way before Lennar, Pulte, KB Homes, DR Horton. They all hit me, boom, 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 like within a half hour. And so that's what gave me the impetus to get short the basket. XRT is another one we've been tracking. We are down in this big void, breaking below 67.50 here. We had talked about getting short up here in the 75 range. I rolled down yesterday and I got, what did I get? June 61 puts here. So one of the things that I've been doing, and which if you've been with me a while, is my protocol, is keep rolling down and protecting. Roll and protect, roll and protect. You get a lot of paper profits, especially in a market like this where they can take them back in like 30 minutes. Keep rolling down. I know it's you're sitting there thinking, wow, if I just hold this position, I got a higher delta, I'll get more as it falls. But that also works in reverse. A spike kickback rally will hurt a lot more if you're deep in the money than if you are even with the money. So my thinking here is, with pressure on the consumer heading into the dead of summer, I think there's going to be less retail buying. I think there's going to be less going out to restaurants. There is not a real good restaurant ETF. You kind of gotta take individual shots at those, but I think those two groups are going to be under pressure with gas, with food. I mean, everything under the sun is going up, and if I think, I can't see a lot of people going out to buy clothes and apparel and all that kind of stuff. So anyways, I'm short XRT. Let's wrap it up there. Be careful out there. Be hyper-focused on your levels. As we discussed last night, try not to get yourself too thin as far as your bandwidth goes. Do a good job on the stocks that you're actively trading. You'd rather have 8 or 10 that you do a really, really nice job on than 15 or 18 or 20 that things get lost in the weeds when things get moving fast, and before you know it, you forgot you even had something, and it's gone against you in a big way when stuff gets moving fast. So time to be careful. We'll have to see if this crypto thing spreads, if the rubber band breaks, or we're in for a vicious snapback rally. Could go either way. Anybody's ball game at this point. So I hope you got something out of the video. If you're new to the channel, hit the subscribe button, the alarm bell. Jump over in the show notes. You'll find a link to drop in your email. You'll get my content morning, noon, or night right in your email box. When things are moving fast and I see stuff, I'll shoot stuff out during the day, after hours, on the weekends. Whenever I got time, whenever I see something important, you'll get it. You'll also get an invite to our trading room, and we'd love to have you. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.